So what's up, guys? Speaking at MIT, kind of unreal. Feel a little bit of imposter syndrome right now. My name is Matt Odell. I've been focused on Bitcoin for about 10 years now. I think it's easy to think of these things as tech projects because that's exactly what they are. They're software. But ultimately, Bitcoin is a movement of individuals. It requires people to do things, and it requires people to step up, and it requires people to support each other along this movement. So about 5 years ago, I came to the conclusion that I needed to do more. And I didn't really know what was the best role for me in the movement, where I could provide the most value. And I basically came up with 3 general target areas. And those areas were money, education, and policy. On the money side, I have 2 focuses. I have OpenSats, which I'm one of the co-founders of, which is a 501c3 charity providing support to open source contributors. And I'm a partner at 1031, which is one of the larger venture funds. And we're a capital allocator to Bitcoin, so we do more than just venture now, focused on for-profit businesses. I also launched Bitcoin Park in Nashville, Tennessee, one of the growing Bitcoin capitals of the country. We just expanded to Austin as well. And I'm one of the founding board members of Bitcoin Policy Institute. We're the largest think tank in DC focused on freedom-focused Bitcoin usage, self-custody, privacy, running your own node. Today, I'm going to focus on the money portion. The money portion is incredibly important. And the reason is we see a massive disconnect. What has been happening over the last decade is most of the money in the greater crypto ecosystem goes to shitcoin projects, even though Bitcoin by far dominates the industry. If you measure any KPI, whether that's market cap, users, value, Bitcoin wins. But if you measure how much money is going into the space, Bitcoin loses. So there's a bunch of people around the world that want to work on Bitcoin, but they don't have the money to do it. We're going to start with OpenSats. So OpenSats, like I said, is a 501c3 nonprofit focused on open source contributors. Not just Bitcoin, but we run on a Bitcoin standard. So we accept Bitcoin donations, we accept dollar donations, and we automatically convert the dollar donations into Bitcoin. We hold our entire treasury in Bitcoin, in multi-sig, so not a single person can rug it. We're not relying on banks, and we're able to pay all of our grants out globally in Bitcoin. OpenSats literally could not exist without Bitcoin. So this is the structure of our organization. It's quite unique. Obviously, we're an organization, so organizations are inherently centralized. But we wanted to mitigate the centralization risk as much as possible. So at the top level of OpenSats, we have a 9-person board, complete volunteers. Every grant decision has to come down to a majority of that board, so it's hard to corrupt. You effectively have to corrupt 5 of 9 board members in order to corrupt it. Then underneath that board, we have a variety of committees focused on subject matter, smaller niches. And those committees are also volunteers. So they review first, the applications come in, anyone can submit an application, and we have grant recipients in 40+ countries, 200 grant recipients right now. The application comes in, it goes into our private GitHub repo. We do reviews all in line, committee does reviews first, board does committee reviews second. And it's basic ACK or NACK across committee and board. Those aren't public, but given any specific situation, they can be made public after the fact. We effectively have a full audit trail of every single decision that happens in the organization. Then once that happens, we send out Bitcoin monthly. Most of our grants are denominated in dollars or euros on a yearly basis, and then they're paid out monthly in Bitcoin. This is something that you just could not do with the dollar system. I cannot imagine trying to run wires to 40 plus countries once a month. This chart is actually from last year. We're now sending out $1 million roughly every month. Kind of unreal that that's even possible. So now 1031. Why does 1031 exist? 1031 exists because first and foremost, I'm a capitalist, and I believe that profit incentives are incredibly effective at scale. I think that capitalism scales the best. I think that's one of the reasons America is such a dominant country. OpenSats is incredibly important because there's some things that just can't be monetized, and everything else is built on top of them. 1031 is important because of scale. So my good friend Vitter is in this room. There he is. He posted this on Nostr the other day. And I think his title was, "Protocols are better than platforms." Now, a couple of things you can take away from this graphic. The first is, it's what happens on the internet in the day. Internet itself is an open protocol. And it kind of gives this expression, this example case, that emails, we're seeing 340 billion emails sent per day, which itself is an open protocol built on the internet. And that protocols, open protocols, are able to hit a level of scale that you don't see with closed platforms, with walled gardens. Now, what you don't see here is, of those 340 billion emails sent per day, about half of those are Gmail. So you have a private company that is scaling email in open protocol. What you also don't see is there's about 150 billion WhatsApp messages sent per day. There's no way for us to really verify that number, but according to Facebook, that's what you have. So just to provide a little bit more context here. Now, that is similar to our thesis at 1031. Our thesis at 1031 is quite simple. Bitcoin adoption will continue to grow. Bitcoin as an open protocol will dominate. The companies that build on top of Bitcoin will be able to scale out the protocol further, and will be able to reap the benefits. There'll be some of the most profitable businesses in the world will likely be Bitcoin companies, similar to how we saw internet adoption. Enter VC. Historically, I've always hated VC. One of the interesting things about my journey is I do have a podcast called Rabbit Hole Recap that we've been doing for 7 years every week. If you listen to every episode of Rabbit Hole Recap straight, it'd be 24 days. So you can torture a prisoner by just playing Rabbit Hole Recap constantly. Why do I bring that up? I bring that up because in the early days of Rabbit Hole Recap, all I would do was shit on VCs. And now I run one of the largest venture funds in Bitcoin. So this is your traditional VC. Everyone thinks it's easy. Even the VCs think it's easy. The reality is, when they come into Bitcoin, it's actually very difficult for them. And why is it difficult for them? It is difficult for them because traditional VC is based on an easy money environment. Their performance is pretty much correlated with interest rates and easy money, cheap money, being able to take as much money as possible in an easy money environment, scattershot it all over the place, and hopefully have a few winners. A16Z itself was founded in a zero interest rate environment. This is not a sustainable phenomenon. This is a rare thing. This is a blip in society with broken incentives. And they're self-aware. They realize that they're a zero interest rate phenomenon. They said the quiet part out loud. So what does investing under a Bitcoin standard look like? It's quite simple. You have an opportunity cost. Bitcoin's the hardest money in the world. Purchasing power should increase substantially with adoption. And as a result, you have this built-in hurdle rate. You have this hurdle rate that you have to outperform, otherwise you're just better off holding Bitcoin. In simple terms, businesses need to stay humble and stack sats about it. So let's dive into this a little bit. You can acquire Bitcoin 2 different ways as a business, and it's actually very similar with individuals. You could be profitable, Not a really complicated concept. Be a profitable business. Stack sats about it. Or you can do like financial engineering tricks, which I think, like the MicroStrategy approach, which I think is more of an arbitrage opportunity that probably won't last very long, but it's just because of where we are in the adoption phase. You have to assume that if you are not a profitable business, you will fail. This is not a complicated concept. Somehow this was lost on people. You need to be a profitable business. And you have to assume that Bitcoin is going to go up forever, because that is what has been happening. It is a scarce asset, and as adoption increases, so should price. So what does that mean? That means that if Bitcoin is going to continue to go up with adoption, earning Bitcoin today can be worth earning 10 times, in 10 years, right? You need to earn it sooner rather than later. So this is what Fiat VC built out. This idea of grow at all costs, lose a ton of money, maybe not be profitable for 20 plus years, and then eventually turn on the profit drivers. That doesn't work under a Bitcoin standard. You need to make money as quickly as possible. You need to be as sustainable as possible, as quickly as possible. So in a Bitcoin world, this might be what a successful business looks like. Only loses money very little in the beginning, and then in Bitcoin terms, that's denominated in Bitcoin. In Bitcoin terms, they might actually look flat. Like their revenue, their profits, they might actually look flat. But because Bitcoin's increasing in purchasing power, that's actually a successful growing business on the right-hand side. Now, that's the hard part about building a Bitcoin business. There's good news, and the main good news is that we have this open protocol to build on that aligns incentives across all companies that are building on it. You can almost think of it as this shared equity pool, right? If you're in a startup, let's say you're a startup at Google or you're a startup, Facebook, when Facebook was a startup, you only have your own internal equity. You have to hope that Google is successful, that you'll eventually get liquidity. But if you're in a Bitcoin startup, most employees own Bitcoin. Most successful Bitcoin businesses own Bitcoin. They have this shared equity. They have this shared alignment. And because it's an open protocol, there are many areas for partnerships. The collaboration we see between the many successful Bitcoin companies in the world is absolutely beautiful to watch. And it's just very interconnected. Like everyone at the end of the day is using this open protocol together. This is just a quick snapshot of some of the companies that we've supported across the entire ecosystem. And what's interesting here is, what fascinates me the most is this idea of companies that maintain and build open source software and then have a separate profit model attached to it. And the reason that this is nice is because it's sustainable. So you have open source software that is able to get built out and maintained without relying on donors, without going and begging for government grants. That is massively powerful, and as a result, should pay big dividends in terms of freedom. With all that said, I think I did pretty well on time. If anyone has questions, I enjoy Q&A the best, so thank you.
Hello. Hey, thank you for your talk. So you had a layer 2 investment in your deck. So I want to know, because I know you're a little bit more maybe specific or like with your investments. So what does an ideal layer 2 or meta protocol or whatever you call it investment look like in your, again, that kind of uses your thesis the same way, but do you have any other criteria for investing, let's say, a successful SATS flowing layer 2? Would you invest?
So layer 2, it's the hot topic, or at least it's been the hot topic for the last 4 months, 5 months, talking to investors. The only layer 2 that we really focus on right now is Lightning. It's actually being used at scale. I think there is some other promising proposals and initiatives, but we're kind of doing a wait and see approach and seeing, how it plays out and where adoption happens. And specifically, we will not invest in anything that requires a Bitcoin soft fork or any kind of change of the protocol layer. I just think that's a recipe to burn capital really quickly. And Bitcoin is very hard to change by default, and that's a feature, not a bug. So you kind of need to lean with that.
Thank you. That was awesome. One of your graphs showed how in a Bitcoin world the company looks successful even though it's flat because of the increasing purchasing power of Bitcoin over time. Yeah, traditional finance is so used to talking about yield. And I'm just wondering what your thoughts are in a hyper-Bitcoinized world. How do we wrap our heads around value and growing value? Is there something better than just thinking about increasing purchasing power?
Yield. Yield is what screwed over this guy. First off, I forgot to mention, just for a comparison's sake, on OpenSats and 1031, there's a lot more capital flowing into for-profit businesses as well. So it's like maybe $40 million has been raised into OpenSats, while $150 million has been raised into 1031, just to give you a little bit of context there, and why both are incredibly important. The question is yield on Bitcoin or thinking about saving on Bitcoin and a Bitcoin standard. I think first and foremost, this idea that your money loses value over time is kind of a perverse thing. Like, I think most people, like the average person, probably doesn't want to deal with investments or hire an investment advisor or pick stocks or figure out which high yield savings account is the right one for them. I think they just want to work hard, care for their family, do the things they love, and just save their money in something that goes up in purchasing power over time, and they just don't have to think about it. But on the investor side, we hear a lot of people wanting yield, and now what they say is safe yield, because everyone got wrecked last cycle chasing yield. I think one of the interesting models, I see we have Rob here in the audience. He's one of the founders of AnchorWatch, which is a self-custody insurance-focused product. So they offer insurance on self-custody. Hopefully one day there'll be an example of a company that's building out an open source stack with a profit motive on top, but he hasn't open sourced his wallet yet, but hopefully he will do that soon. Right now they denominate their policies. They have a Lloyd's cover holder, Lloyd's of London, and they denominate their policies in dollar terms. Now, I think there could be a world where it's denominated in Bitcoin terms, right? So if you have one Bitcoin, it's insured as one Bitcoin. And then you could basically have a one-to-one Bitcoin coverage. And then if you put Bitcoin into that, on the opposite side of that, on the insurance side, then you could take a cut of the premiums. And then you kind of have a non-G-Gen yield pool that is lower risk than basically what we've seen up until this point, which is just you take money and you lend it to degens, and the degens just lose all the money. So you have that, and I think profitable businesses is a way to look at it. Sats flowing businesses that have positive cash flow, and those are either coming in as Bitcoin directly, or they're coming in as dollars, and then they're converting it to Bitcoin and storing it as Bitcoin long term.
My wife and I are veterinarians, and we're kind of one of these for-profit businesses operating in a kind of an industry that's turned more like hyper fiatized and hyper financialized. So it's made it really easy for us to stay humble, stack sats.
Nice.
We recently bought just a super ugly veterinary hospital and are running super lean. But I was kind of just thinking about the kind of way to operate. We built a farm and kind of plug our extra Bitcoin into spreading meat through farmers markets and donating to soup kitchens. And I thought I'd be happy just doing that, but this kind of makes me want to scale up and like kneecap all the super corporatized things that are taking over our industry. Are there any funds, like you guys specifically fund like Bitcoin building companies, but do you know of any funds that fund like an anti-fiat, anti-corporate Bitcoin standard for-profit company? Like, is that
Not yet.
Not yet?
It's something that interests me a lot. It almost like it's almost more of like a private equity strategy, but like a non-predatory one. Of like the idea of like like investing in just profitable small businesses that run on a Bitcoin standard. I think there's a lot of opportunity there. I think what people don't realize, like everyone loves Saylor, but I think like the Bitcoin treasury strategy actually benefits small businesses the most. So like if you're just running like a profitable dentistry office and you just keep your profits in Bitcoin, you're probably going to be one of the most valuable dentist offices in like 10 years. Next question.
Howdy. Funding software maintenance has been a theme of today and yesterday. Does OpenSat support core devs, or what? How do you contribute to that?
Yeah, so we've approved about 230 grants in total. We've rejected about 1,200 grants, just to give you an idea of scale, which is pretty crazy. And those grant recipients cross the gamut. So there's some are like very small projects and very small grants that are external to core. We probably are funding, depending on what you count as core or not, like 10 to 20-ish core adjacent people. I have here 20 long-term support grants. So that's one of our newer initiatives that we're trying to scale up, which is this idea of a 2-year term rather than a 1-year term. Give some of the really fundamental contributors that are doing a lot of the maintenance and a lot of the review a little bit more security in terms of what they can expect. And that also comes with an easier like review and renewal process. So all of our grant recipients, they submit quarterly reports to us as well. So we have like 200 outstanding grants right now. That means we have 800 reports coming in every year. And we do all of this, I don't know if I mentioned it or not, but we're 100% pass-through. So we have a separate operations budget where people can donate just to operations. So our operations is incredibly lean. It's like, it's a couple salaries, basically, is the majority of our operations. So we're trying to scale that up in the most lean way possible, and there's been some growing pains. But yeah, we love funding maintenance. We had Roger up here earlier. Like we provided some funding to Tor that was for that focus. But yeah, maintenance is incredibly important. I thought Adam did a really good job yesterday, where people just don't realize, like, it's like a small town fire department, and you just these people need support, and the burnout's real as well. And it's easy to get disenfranchised, and so we have a lot of focus there.
So you've got these two funding orgs that are kind of separate concerns between VC and open source. What do you think is the relationship between Bitcoin businesses and open source projects that a lot of times they rely on? And how can some of the value that the businesses create kind of accrue back to open source, even not just monetarily, but like technical contributions and other things?
Well, I think there's two pieces here, right? The first thing is, unfortunately, we haven't really seen broad ecosystem support for open source contributors from the for-profit businesses. You know, like Coinbase historically, for instance, probably one of the most successful quote unquote crypto businesses in the world, hasn't really given much back to Bitcoin developers and Bitcoin open source contributors. They do a little bit, and it's appreciated. Every bit is appreciated. But in general, this idea of providing sustainable funding and sustainable support for the people that are actually building out the protocol has been less than desired. So first of all, what I'm hoping is we do have this new breed of Bitcoin businesses that have only been launched in the last 3 or 4 years. As they start to become more profitable, hopefully they will start this trend of really contributing in size. The second piece is only until recently has there been any kind of real funding for Bitcoin businesses that are building out more self-custody, open source kind of focused verticals. Historically, where you see the majority of funding goes in two directions. It's KYC exchanges, so just buy, sell Bitcoin, charge 1%, very easy, not easy business, but straightforward business model. And mining, which is a brutal business, very capital intensive, but is easy for capital allocators to wrap their head around. Businesses like a Start9, for instance, right, which is a completely open source stack where you can host things at home, right, basically a server at home, and then build premium services that you sell on top of that, is a harder business to raise money for. And we're just starting to see capital allocators willing to take that risk, and support those types of projects. Mempool.space is another perfect example of that. Like Mempool is a completely open source stack. Anyone can run their own mempool instance at home. Convincing investors that could actually be a profitable SaaS flowing business is much harder hurdle than convincing them that Strike can be incredibly profitable, for instance. I think I have time for one more question. Otherwise, we'll wrap.
Good morning. Thanks for the talk. Just curious, how do you think about your funding priorities, themes, etc.?
On which side? On 1031?
Either or. Yeah.
OpenSats is kind of beautiful because we hold our treasury in Bitcoin, and we're not beholden to anybody else. I mean, raising money for it has been a slog, and fortunately, there's like one or two players that provide the overwhelming majority of funding into the ecosystem, and we need to broaden that donation pool. But the nice thing about OpenSats is it's just open application, so we don't really have to think that closely about what we necessarily want to see. We see what applications come in, we review them, and then we decide if we're going to pay or if we're going to approve the grant or reject the grant. On the 1031 side, I mean, I want to see more businesses that are focused on self-custody and freedom-focused Bitcoin usage, that are focused on trust minimization in terms of third parties, and that can still have a sustainable business model. I think we saw the early days of that with the two main CoinJoin wallets, with Wasabi Wallet and Samurai Wallet. They were open source stacks that had a sustainable Sats flow model. Now, they ran into legal trouble, which is one of the issues with centralization, is that you have a central party that you can prosecute and put in jail. But the general premise of an open source stack that because of Bitcoin, you're actually able to monetize directly in a sustainable, ethical way is relatively new. So I want to see more of those things happen. And we have been allocating to those types of projects like mempool.space, projects like Primal, projects like Start9. Anyway, guys, thank you. My time is up. Appreciate you all.